next target. Now I mentioned the US 10-year Treasury note here in the daily interval. Each kind of represented day was in a very precarious and or vulnerable positioning, which would send the stock market surging. That's exactly what had happened. And I mentioned in my previous video alert here that 2.928 spot price of the 10-year note would offer objective short trade entry off that primary downtrend line, multiple and continuous reactionary highs to help validate that, and that was good for a 6.82% drop. And really what had happened is we put in this huge divergent high with negative and bearish divergences really constructing and establishing themselves on all three indicators going back as far as April, with a beautiful rising bearish wedge pattern here, primary uptrend line here off the March, continuous reactionary lows to help validate that, broke down, put in a sell signal. I added this primary downtrend line here off the June reactionary highs with multiple continuous reactionary highs to help validate that. Now we put in this bearish deliberation continuation pattern followed by 3 black crow pattern and a bearish doji star, and we never looked back. Crashed down for 6.82, and really we had a reaction right at my 2.739 price support, good for a 0.5% move to the upside, you know, that further validates us that key price support level. Big level to watch right there. 2.713 price support here is really what all traders in my opinion will be watching there for a breakdown sell signal if we get it. We do have a very bearish posture here off this pattern here. We have this right shoulder, we've got the head, and here's your right shoulder right here. So again, this is really not even coinciding with the price support of multiple reactionary lows and reactionary highs to help validate that 2.713 price support, but truly is the neckline of this head and shoulder top here on the daily interval. And a breakdown below, I believe, will start to spell further upside for the stock market if we get it. We already have a crossover here on the MACD, gun down, broke down below the zero line, especially on the oscillator. We just need that negative divergence confirmed on the oscillator there as well. We do have RSI, huge steep negative divergence, near-term divergence there on the RSI, which is really more so bearish. But we need that confirmation, especially in the oscillator there, and more so starting to peel out there on the MACD. So anything's possible. We'll see what happens. These are your key levels to watch. Again, this is where you open your position cover there. We'll send here at the Nasdaq 100 futures. We had this bullish falling wedge pattern, broke out to the upside. Here in the S&P 500 futures, broke out off these bullish falling wedge patterns. And again, anything's possible. We could start to really have a reset, come back, back test the primary downtrend line here. If not this price support here at 38.9652, which coincides with that 236 fibs retracement, and we could start to stair step higher, especially if this 10-year Treasury note starts to break down. So we'll see what happens. Anything's possible. We could just melt down below here, and hey, rates start. Maybe this is the bottom for rates, and we start to pop up and break out to the upside. Anything's possible. So we'll see what happens. We're at a key inflection point. We'll see what happens. I'll keep you updated if I see any more significance on the chart.